Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis. We're going to take an in-depth look at different stocks that are quite prevalent in the news during that past week. And today, we're going to take a closer look at Twitter. And I'll let you know if you find the video interesting. Again, be sure to hit that subscribe button below so you're informed about our future Smart Investing Weekly Stock Analysis videos. But as I said, Twitter, we were kind of talking before we got on here, and I'll let you kind of share your input on Twitter, I guess. I don't want to steal your thunder.
Sure. I was gonna say he's gonna say it. I got nothing left to say. No, it's not true. I got lots to say about Twitter, but that's my point. There's not a lot to say about Twitter. Twitter's not the name it used to be a few years ago. Like everybody, like, oh, tweet this, tweet this. I have not heard much about it. And they used to say it on TV all the time. Like, oh, did you see this tweet? I heard it on CNBC, on Fox Business. I can't remember the last time I heard somebody talk about some major tweets that are coming out. I think now I'm thinking about it, there was like one or two. It does happen from time to time, but it seems to have lost the excitement the tweets used to have. Maybe it's just me. We'll see what our viewers say, but that's my feeling.
I mean, I know I don't have a Twitter. You don't have a Twitter.
No?
As I said, I don't know many people that frequently use it. I know a couple friends still use it for like sports news, but other than that, I don't know how prevalent it is and what demographic it's really fitting into. Obviously, you're a different demographic than I am. I know the younger demographic now, they like TikTok, and who uses Twitter? I don't know.
Yeah. Hey, man, you got TikTok, you got Instagram, you got Facebook, you got LinkedIn. I think Twitter was big when they first came out because it was like so unique, but they just got too much competition. There's definitely no moat there that protected their business, and I just don't know. And I don't know why I'd even use Twitter. Why would I use Twitter? I got these other social media sites to work with and get out a message.
Yeah, I don't know. It beats me again. I'm not going to use it anytime soon. So, but kind of talking more on the financial side, I did want to bring them up because they did report earnings this past week, and it was an interesting report that I was shocked, honestly, that they didn't fall as much as I had anticipated. I say that because earnings per share, well, they came in at 33 cents versus a 35-cent expectations. Revenue came in at 1.57 billion versus 1.58 billion expected. The monetizable daily active users came at 217 million versus 218.6 million expected. Company provided revenue guidance for the next quarter ranging from 1.17 billion to 1.27 billion, while analysts expected 1.26 billion. That's all bad. There's not one good source of news that came out there that said, wow, that's some great news.
I don't think I heard you say they matched or beat one of those 4 or 5 items laid out. And that's just so amazing because generally the earnings and the expectations you usually hear, and they generally want to have the stock go up, so come in and beat that. But I don't think they beat on one of those 4 or 5 that you just mentioned. So I am surprised with the stock, what it's doing. That didn't fall dramatically, but
I mean, it had a large fall, and we'll kind of get into those numbers. But what did hype it up, and we talked about it briefly here, was it seemed like the stock wasn't doing well, and then Twitter announced a $4 billion stock buyback plan. That's kind of what gave it some life, and I believe they said $2 billion of it would be an accelerated share repurchase program, and the other $2 billion would kind of be a longer stretch of time.
I'm excited to look at the numbers here because this is not on Facebook, but I was kind of surprised. I mean, we know that Facebook had this big pullback. Facebook could almost be ready for us to take a look at as a value company. So I'm wondering if Twitter, and I don't follow them that closely, but I'm just wondering if Twitter's in that same category because we could pick up maybe some good companies here and good valuations if these declines continue. So we'll see. That's why we watch these.
Yeah, and the other thing I want to talk about too is stock buybacks. I mean, it lifted the stock that day. I'm going to say it's kind of a temporary news event that could lift it, but it's not going to be a long-term event, I think, for Twitter. And I'll talk about stock buybacks more generally. We're big advocates of stock buybacks, but big caveat, has to be at the right price. If you're trading at 30 times earnings and you're buying back your stock, that's a huge concern to me. Because what you should have, if you're trading at 30 times earnings, you should still be having a lot of growth, and you should be having different capital opportunities to invest in that's going to exceed your stock. But stock buybacks are generally reserved for value companies that say, well, our stock price trades at 14 times earnings, 13 times earnings. This is a great value for us to invest in. I mean, that's why I'm very intrigued to see what Twitter looks like, because I think it could be a huge waste of capital to take $4 billion and buy back your stock.
Chase, one thing I want to point out too is that I remember years ago I read this, that these are announcements of stock buybacks. It's not a guarantee they're going to do that. Things can change and the board of directors can change. Like, no, we can't do that because we got to do this now. So, these announcements, I would say most of the time they do come on through. But as an investor, you have to realize that if I bought that stock just for that stock buyback, that may not happen. It's just not, it's not a guarantee.
Well, and again, if I'm a stock investor in Twitter, and again, they could be investing in other areas, I'm pissed off if they take $4 billion to buy back their stock. I mean, you kind of see other companies as well. IBM, GE, they've wasted a ton of money on stock buybacks. You don't want to be the guy paying the high price in the room. Doesn't matter if you're an investor, doesn't matter if you're a company, doesn't matter if it's your own company. If you're paying the high price, that's not where you want to be.
Almost worthwhile if you do have a high priced valued stock. You might be better off buying somebody else's stock that's a better value than your own. And I think it's a false sense of security, like, oh, our stock's a great buy. No, it's not. Not if you're at 30 times earnings, you have great cash flow. You keep missing these marks you're supposed to miss. It's kind of like they're trying to fool the investor, like, oh, well, that's a great value. We say so. That's why you got to do your own research. Don't listen just to a couple items.
And kind of funny today. I mean, we talk about doing Twitter, but they actually did experience a global outage earlier today. So
did anyone notice?
Yeah, I didn't even know. But I guess they did resolve it. But it is kind of funny. I saw that news come across the headline. Twitter experiences global outage. I was like, oh, what a prime time to take a look at this company. Can't get the numbers right. Can't get their platform right. Gosh, how's that stock looking, huh?
You said a global outage, right?
A global outage. Yep.
Yeah. Let's look at some numbers here.
Yeah, let's take a look at the numbers here for Twitter.
All righty, there we go. They're in the internet content and information industry. Not much float. I wonder if that's going to change down the road here. Only 2.9%. Good institutional ownership of 81%. I thought you said they made 30 cents a share, but I guess over the past year, there's no PE ratio, so they may made 30 cents this past quarter, but for the last 4 quarters, no earnings there at all that we can see. We do see the industry's at 19.4. Price of sales 5.9. That's actually a little bit better than the industry at 6.4. Price of tangible book value 4.9. That is better than the industry at 6. And even price of cash flow 19.1 versus 20.7. So I think we got some good valuation ratios, just not quite good enough. The PEG ratio, which is the price earnings divided by growth, tells you how much you're paying for the future growth of the company, does look pretty good at 0.8, but not much better than the industry at 0.9. Here we go, showing no earnings for the 1 year, the 5 year. Good job on sales. They did grow their sales 29% for the 1 year. I'm not sure who is getting Twitter now. That maybe you and I are left in the dark here, but I just don't know who would be. Oh, Twitter's something new. I got to get Twitter. I don't get that part. And look at that 5-year earnings growth estimate, 80%. What are these analysts seeing that we're missing here? And that's why, again, you got to do a lot of reading if you're going to buy this company. They're seeing something. We're just not seeing anything there. No dividends on the company. We do see on the balance sheet, pretty good balance sheet to start with here. Current ratio 4.1, better than the industry at 2.9. That is good. Debt to equity 80% versus 20%. That is higher than the industry, but it's not too bad at 80%, especially for this type of we'll still call it, quote unquote, a growth company. I do see that we got a net profit margin of a negative 3.8 versus a positive 30.9%. So that's not good. They got to start making money here. Return on equity at negative 2.5%, industry at 29.4. Even return on capital not very good, a negative 0.8% versus 23.2. Chase, let's look at some numbers going forward.
Yeah, well, before we look at numbers going forward, I want to see where we're at currently. Current price here, $35.84. Wow, I didn't realize that last year Twitter was at $80.75. Massive decline there, more than 50% drop from the high. 52-week low, you can see it's trading near that as it's $32.05. You can see year-to-date return, not great at all, down 17.1%. Still see here it's a pretty good sized company, market cap about $28.6 billion. Now what we want to do is we want to look at those earnings, and we're going to look at it going forward. So we're going to look at the earnings estimates. We can see here, we want to look at it on an annual basis. We're going to go out to December 2023. If we use our 16.6 multiple on $1.18, well, that would give us a target sell price of $19.59. You can see here they still trade at 30 times future earnings. And I don't even know if that includes the updated estimates. So you could see that fall even further, and they could be trading at 35 times future earnings. I still don't get it. I mean, that's a way too high multiple to be buying back your own stock, in my opinion. I think it's a waste of capital for Twitter to go in and do that. And I know I wouldn't be buying the stock.
Yeah, there's nothing that we saw here that's like, oh yeah, this could be a possibility. As I said earlier in the show, that perhaps Facebook could be a possibility as a buy, as a value company. If it drops, we'll see maybe another 10% or so. But I see no reason at all to be even looking at Twitter. And again, we're not growth investors, we're value investors. But gosh, I think you have to go out to about another 3-4 years. And how can things change over that time frame in the social media space? It's going to be too much competition out there for Twitter.
Well, and what I think is so important is what's made these social media companies interesting is the monetizable base, people that use it. Well, if you're not growing that base any longer, or worse, it's starting to decline. If I'm an advertiser, that's how they make their revenue. Or I've heard they've been thinking about doing a paid thing. I don't know too much about that, but I think they still get most from the advertising. All of a sudden that base declines. I'm like, why would I advertise on your platform? Nobody even uses it anymore. That's the big concern. That's what you want to understand. And not a lot's adding up for me to like Twitter, even at these prices with a more than 50% decline.
I was thinking, gosh, we can tweet this out, but I think if we tweet it out, we'll just get crickets on the way back from Twitter.
Well, we'd have to download Twitter again too. I don't even know
Oh,
how
that's
to do
right.
that.
That's the thing too. I've never been asked, I don't know about you, but I've never been asked, because we've been asked for on Facebook, LinkedIn and so forth. People wanted, I've never been asked, say, hey, can you tweet me something, put me on? No, nothing. And gosh, it's been what, 2-3 years. So
Yeah, I don't know where their growth's going to come from. I know they got a new CEO, but yeah, this is just one that I say avoid.
I agree.
Well, all right. Well, thank you for watching the Smart Investing Weekly Stock Analysis. Again, if you find this video informative, you find it useful, be sure to hit that subscribe button below so you're informed about our future videos as well. Thank you again for the time. Just as a reminder, this video is for informational purposes only and should not be used as investment advice. If you are interested in more details about an investment advisory firm here, Wilsey Asset Management, go to our website, smartinvesting2000.com. See you next week.